PropShare Capital and CNBC-TV18 present Investing in Global Public REITs.
Hello and welcome to PropShare Capital and CNBC-TV18 presents Investing in Global Public REITs. Now, this is an asset class that is gathering a lot of attention, at least in the last 6 to 12 months. And today we are going to delve into the dynamic world of global public REITs, which is real estate investment trusts. And now, of course, as we know, this is commonly known as REITs, but we'll delve deeper into what this means as an asset class, what is the kind of opportunity that investors have here, and how you should be looking at it. To take this conversation forward, I'm joined by Kunal Muktan, who's the co-founder and CEO of PropShare, for his expert insights. Kunal, thanks a lot for joining in. Let's just set the tone of the interview by talking about the definition of global public REITs and how they differ from other investment options.
Right. Thank you so much for having me. REITs in particular, like you've mentioned, are real estate investment trusts, and they hold rent-yielding real estate. It could be anything: commercial offices, warehouses, even casinos, retail malls, shopping centers, etc. And REITs have been a global phenomenon for a very long time. It was pioneered in the West, in the US, in about the 70s, where it's a very big market now, $1 trillion market. In India, we started REITs only a few years earlier. When I was at Blackstone, we ended up buying a lot of these commercial properties, and there was no way to exit them except through the public markets. So we petitioned the regulator for REIT regulations along with various other participants. And that's how the first REIT regulations came about, I think, in 2014. And the first REIT was listed in 2018, which was the Blackstone Embassy REIT. After that, there have been 2 other office REITs by Brookfield and Blackstone, and a retail REIT very recently by Blackstone, and a few InvITs as well. So real estate investment trusts are structured as a trust. They own rent-yielding commercial real estate. And the word global simply means that they are listed globally. In most of the cases, REITs are publicly listed vehicles around the world.
Absolutely. And, I think why this gains more importance right now is because we are in a real estate market that's booming currently. And a lot of people may want a share of that booming real estate market without actually buying the physical asset, right? Which is real estate or commercial real estate, as you pointed out. So can you outline the key advantages of investing in global public REITs and how exactly will investors profit from it in a market like this?
Right. So REITs are structured, like I said, as trust, and investors can end up owning units of the trust, just like shares in a publicly traded company. The only difference being that the underlying asset that the REIT holds is rent-generating real estate. And the advantage of the REIT is that you can own a piece of the real estate, like you said, for a fraction of the price. So you could buy, a huge shopping center for about $10 or $20, or in India's case, a few thousand rupees. And that's the real draw of a real estate investment trust. It makes you own high quality real estate at a fraction of the price. And that's why it has gained so much prominence all around the world. And also in India in the last few years. So that's the big advantage. And if not for REITs, then an investor would have to buy these assets himself, which obviously involves a very large capital outlay. In Indian currency, thousands of crores sometimes. So it's not easy or even sometimes possible to buy some of these assets on your own. But through a REIT, you could end up owning a substantial portion of those assets by investing a smaller amount.
So, what are the specific factors that one needs to consider before, investing in REITs or before using REITs as an investment vehicle?
I would say that the quality of the portfolio is the most important. Like I said, every REIT is structured differently. Some REITs have offices, which obviously one would like to avoid right now in the West because it's not doing particularly well. Some REITs have retail malls, some regional shopping centers, some warehouses, logistics assets. Some are cinema halls. So there are various things one needs to see. But the most important thing is, what does the REIT actually own? That I think is the most important consideration that an investor should have. Other than that, of course, one should look at what yield the REIT is trading at. All REITs trade at a yield, which is the quarterly and annual dividend that is paid by the REIT to all of its unit holders. Of course, one has to look at management and corporate governance and so on and so forth, which one looks at in every publicly listed company. But in particular, in REITs, you'd have to see the portfolio that they own.
But is the current market conducive for investing in global REITs? I ask because this is a market that has come out of a huge lull period, right? But now it seems like there's a little bit of euphoria also setting in. Your view on that?
So, very interesting question. REITs are very cyclical in nature because they are very closely correlated to the interest rate cycle as well as the how the economy is doing. And because they are coupon yielding instruments, they track the interest rate environment very closely. So in a high interest rate environment like we face today, where interest rates have gone up very, very quickly to very high levels, then the REIT stocks fall down just like bonds, because obviously investors compare the yields on a REIT with risk-free securities, let's say, which is the treasury yield right now in the US, which is currently close to 5%. So therefore, REITs which are trading at 2-3% yields also go up to 6-7%, because there's a bit of a spread between a risk-free asset and a REIT, and therefore the prices need to fall down. Now REITs are coming off a very turbulent a few years, thanks to the COVID-19 pandemic, which was, as we all know, a very significant event in our time. And what happened during that time is, people stopped going to offices and cinema halls and retail malls and so on. So for a brief period during 2020 and 21, REITs traded down very sharply. But as has been the case in the past, they came back really quickly, given the fact that the pandemic also died down and people returned to offices, albeit in a hybrid model, and also to retail malls, etc. But the last few years have been really good for REITs because people have started coming back to office, the environment has picked up, and therefore REITs have done really well. But what has happened in the last 6 to 7 months is that the interest rate cycle, like I was saying, has gone up very quickly. In the US, rates were 0.1, almost 0% after the COVID-19 pandemic, because the governments obviously wanted people to go out and spend money and resuscitate the economy. But the result of that was that in about a couple of years, there was very high inflation because the money supply was really high. And as you might have noticed, every central bank in the world has increased interest rates very, very sharply. The US has increased interest rates by 2,000%, from almost near zero to about 5.5%. The UK to 5.25%. There is probably one more hike coming in today as we speak, and the EU as well. And when that happened, the REIT prices came crashing down, and that's where the real opportunity lies today, because the two other occasions when this has happened in the past, in 2008 and 9, the financial crisis, and the 2020 pandemic, investors ended up making close to 200 to 300% return when buying at these levels. And to touch very briefly on why that happens is that REITs have their assets on one side and the market cap on the other side, which is how it finances these assets. And when the stock prices falls very sharply, which it has done in the last few months by almost 30-40%, then there is a dislocation between the asset value and what the stock is available at, which is usually mentioned in terms of discount to NAV in REIT terminology. And that discount to NAV is currently at 25%, which is very, very high. So in a way, you're saying that the asset value is $100, but you are getting it for $75, which is where the real opportunity lies today. And in the occasions in the past when it's happened, where the REITs have traded below NAV by 20-25%, in each of those occasions, REITs have come back to their mean levels, which is closer to 0% NAV. And when that happens, investors tend to make 20-25% IRRs. So it's a very significant opportunity today if you pick the right REITs in the right segments globally.
Understand that because in India the REITs market is still very small, right, and very untapped. So in the global markets, which are the markets or sectors or rather regions, right, where REITs is picking up and is a good investment?
Yes, you're absolutely right. REITs in India are still quite nascent. Like I mentioned, we only have 4 or 5 of them. But in the US, which is actually the biggest REIT market, like I mentioned, where REITs have been trading for the last 50, 60 years, that is where the biggest opportunity lies, as well as in some of the European and in the UK as well. So, I would say that region-wise, the US is probably the best region to invest in. And in terms of sectors, industrial, warehousing, these are doing extremely well after the COVID pandemic. A lot of people are buying online. As we know, a lot of the retail high streets are not doing very well. People are now used to going online and buying stuff, and when that happens, of course, they need larger warehouses to stock their units. Third-party logistics players end up doing very well. And unlike in India, it's very difficult to build in the West. Also, construction costs have gone up significantly over the last couple of years because of inflation, because of issues in China. Steel and cement prices have gone through the roof. So it's much more difficult to build new warehouses. And therefore, if you are a REIT which owns these warehouses already, then you are in very high demand. It means that your cash flows go up, your occupancies go up, and which is what we are seeing today in the REIT market. So I would say, to answer your question, US is a great market to invest in. Logistics and warehousing is a great space to invest in. Also healthcare REITs are doing very, very well. Data centers, these are doing really, really well. So, other than office, every one of the REITs are actually doing extremely well right now.
So, got that. That's interesting. Can you share a recommended approach or a strategy? So, if somebody is, newly investing in global REITs and has no knowledge whatsoever about how to make that investment, right? What is the best way to do it?
So I would look at some of the largest REITs that are trading in these markets. As a lay investor or someone new to investing in REITs, I wouldn't try to be very aggressive or very experimental in my approach. I would go for the really big names which are currently trading out of favor. Any blue chip REIT, the way I would look at it is, first, let's look at the market cap. Is it big enough? Is it at least $4 or $5 billion? What's the credit rating on the REIT? Is it at least triple B or above? If it's A, it's even better. What is the yield that the REIT is trading at? Is it at least 3 to 4% or even more, which means that the stock price has fallen? And most importantly, what's the discount to NAV? If the discount to NAV is 20 to 25%, it's a large market cap, good credit rating. The dividend yield and the dividend paying history of the company is very high. The free cash flow of the REIT is high and it's growing, and it has a portfolio of very high quality assets. Those are the ones that I would go with. So put it very simply, I would just go after the blue chip REITs which are trading at a discount given the dislocation in the markets.
Okay, so you go with the blue chip REITs. Got that. Are there any risks that one should be aware of before investing in REITs?
Yes, like any other investment, there is risk involved. This is a publicly traded stock, and therefore there is volatility. Stocks go up and down. So while they've fallen by 30%, there's no saying that they could fall by another 10, 15%. No one knows that. But what one does know is that when is it likely to start going up? And to answer that question, one just needs to see where the interest rates and inflation are. They've all started tapering off. Inflation has fallen quite a bit in the US from 8% to 4%, in the UK from 10% to around 6%, and also in the EU. And therefore, all the central banks have started almost pausing interest rates hike. Like I said, we'll probably see a 25 basis points in the UK and maybe one more 25 basis points in the US. But after that, it's probably going to be flat. And this is the time when the Fed signals to the market that interest rate regime is on a downward slope, which means that REITs will start going up. So we know that at this point of time, the likelihood of it falling more is a lot less than of it going further up. So that's one risk, which is real estate. Always has a lot of risks underlying. So one needs to see exactly how the industry is doing. If you end up buying offices, for example, and there's a lot of vacancy, people work from home even more, then there'll be a lot of vacancies in the underlying portfolio. You'll get fewer dividends, and therefore the stock prices will fall down. Inflation could end up not going down further. It could end up staying there for some time. Interest rates will therefore stay up for some time. So these are all fundamental risks to investing, and you should be aware of that before investing in a product like a REIT.
But at a time like this, when market conditions are a bit tricky, right? There is a possibility that the Fed may hike rates further, may keep the rates higher for longer, and at a time like that, risky assets tend to take a bit of a back seat. Want to understand in such a market condition, what is the potential for investing in global REITs?
So I would say that when the interest rate cycle is in an upswing, that is where one has to be really careful about investing in these coupon bearing products. Like I said, when, for example, when the interest rate was near zero, one should be very conservative in investing in these products, and that's why we didn't look at this product at that point of time. But once the interest rates start peaking, which is where we are today, and flattening out, then that is where this product does really really well. So it's a very opportunistic sort of a play which only happens once in 10 years or 15 years, but there is ample evidence to show that whenever that has happened in the past, and investors have taken a call to invest in these high quality REITs, they've done well. So I would say that the risk is more when the interest rate curve is upward sloping, and not currently where the outlook from the central banks around the world is more dovish, and it's likely to not go up more going forward, and kind of stay flat or go down. I think that that tells us that this is probably a much better time to invest in these stocks.
Okay, thanks a lot for joining in, and and appreciate your thoughts here to talk about both global REITs, the definition of global REITs, what is the kind of opportunity that one sees, and I'm sure this is an asset class that will go a long way, considering that it's just picking up now, even in India. I mean, REITs are picking up in a big way. Thanks a lot for joining us on the show.
Thank you so much.
PropShare Capital and CNBC TV18 present Investing in Global Public REITs.